Hey everybody, how's it going? It's Russell Matthews here, and in today's video we're going to talk about some new information that just came down the pipeline that could end up saving you some money. Just a couple days ago, the Canadian government released their first fiscal update since the start of the pandemic, and inside of this 200-page report there was a whole bunch of information that pertains to Canadians and their money and how it's going to affect them going forward into the future. Just a couple of days ago, the Canadian government put out their first economic update since the start of the pandemic. And inside of this 200-page report, there was a whole bunch of information that helped Canadians understand what was happening with their money and what the government's plans were for that money going forward. This update also included some proposals for new legislation that could affect Canadians who are in the job market, or if they have children, or if they work in the arts industry, and really a whole bunch of things. And I made a video about it yesterday, so if you're interested in making sure that you're not missing out anything that you could apply for, make sure to check out that video down in the description. But one thing that we didn't touch on in that last video is a new tax credit that could apply to tons of Canadians that could save them money. Now, we all know that if we've been receiving the CRB or the CERB, or we've made any amount of income this year, we're going to be required to pay income taxes come April 2021. Now, it's a goal for many people to reduce that amount of income tax that they'll have to pay so that they can keep a larger amount of this money, and this new tax credit could help them do that. And it seems like they're trying to make this more broadly accessible to as many Canadians as possible with the changes that they've made. So I figured we'd take a second to talk about it and to see if you could be somebody who could benefit from it. After all, whenever there's news or information about Canadians and their money, maybe they could save a little bit more or set themselves up to have a better and more stable future, I'm gonna talk about it on this channel. So if you're into that sort of thing, make sure to hit all those buttons down there, like, comment, subscribe, all that good stuff. Now let's get into this new change. If you've been following along on this channel for any amount of time, you'll probably know that one of my main concerns for the average everyday Canadian is that come April 2021, when they have to pay back their taxes, it's going to be a lot higher than they may have expected, and that's largely due to the benefits that they may have received. These have all been taxable. So we've talked about in the past on this channel how you can reduce the amount of taxes that you're going to pay at this time, and even completely avoid the tax that would come along with the CERB and CRB. And in that video, we talked about a whole bunch of things, so if you didn't see that, make sure to check that out. But one thing we did talk about was the home office deduction that many people are able to claim now because they're working from home. More and more people have been working from home, and if you've been using some space in your house as your home office or have been doing the majority of your business from home, you could be able to write off some of your housing expenses. And that's exactly what this new update simplifies to make it easier for more people to apply for and to be able to save money on it. So let's take a look at the exact wording that I found when I was combing through that 200-page fiscal update that just came out. This section of the document is called Simplifying the Home Office Expense Deduction, and it says that millions of Canadians are unexpectedly working from home because of COVID-19. They're turning their bedrooms, basements, and kitchens into offices and taking on increased household expenses to do their jobs. Canadians working from home can already deduct certain home office expenses for tax purposes, but first-time claimants may not be familiar with the rules, and the claim process imposes an administrative burden on employers who are already dealing with the broader impacts of the pandemic and have to fill out additional information for their employees who qualify. So what this means is that even before, this sort of tax credit was already in the system, but with COVID and the pandemic, so many more people are working from home now. As a result, more people are going to want to claim some of these expenses. But the downside to this was that if you were going to start claiming these expenses, you had to fill out some lengthy paperwork that both you and the people working at your office would have to sign off on. And with so many people working from home now, that's not really sustainable, both for the people who are new to this and are applying for the first time, and for the people who manage it on the office's side or on your employer's side. They would have had to fill out hours and hours and hours of paperwork, sign things off. It would be pretty complicated. So let's take a look at how they're going to solve this. The government is saying that to simplify the process for both taxpayers and businesses, the CRA will allow employees working from home in 2020 due to COVID-19 with modest expenses to claim up to $400 based on the amount of time working from home without the need to track detailed expenses, and it will generally not request that people provide a signed form from their employers. This measure will help taxpayers access deductions that they are entitled to receive and simplify the tax filing process. Further detail will be communicated by the CRA in the coming weeks. So what they're saying is that essentially anybody who's using their home office for their work will be able to use this $400 to reduce the amount of taxes that they're going to have to pay come tax time. Again, that's super important because it's going to be a lot more for people than they might be expecting this year. But just to clarify, this doesn't really equate to like a $400 benefit. It's not like you're saving $400 right away. The way these tax deductions work is that you're just going to reduce the income that you're showing by $400 for that year. So as a result, you'll get taxed on $400 less of your income. Now, depending on your individual tax rate, that could mean that this $400 could only really save you about $100 in most people's cases. If you want some more clarification on exactly how this works, along with some other ways that you can completely avoid paying tax on the CRB and the CERB that you may have received in the past, then check out that video I was talking about before. It's linked down there in the description, and I go over a few different ways that I know that I'm going to be using to reduce the amount of money I have to pay back come tax time. But the way that I look at saving those smaller amounts of money is just how much that could turn into if I were to invest that money that I would have otherwise had to pay to the government. Just by taking advantage of some small tax tips, along with other things that can help you to save a little bit of money, can have a huge impact on you in your future. And this is exactly how I think of it. If you were able to take advantage of a couple tips and save an extra $500 per year, and you invested this for 40 years at an average return rate of 7%, that's something you can expect if you invest in the stock market in something called exchange traded funds, which kind of just tracks the overall market instead of just investing in one company. And you were able to contribute that $500 every single year just by saving a little bit more, maybe taking advantage of these tax benefits at the end of that investment period. Just by doing that little thing and that little lifestyle change, you could have an extra $100,000 or even more by the time you go to retire. I guess that's just the way that I tend to think about things, and I'd really recommend you start thinking about things that way too, because if you're able to take advantage of these small benefits and these small ways that you can save a little bit of money, and you're able to invest it and sit on it and watch it grow, it can have a huge impact on your future. And after all, that's exactly what we talk about on this channel, these small tips and tricks that can help you get your family into a better financial position for the rest of their lives for generations to come. So if you're someone who's interested in that sort of thing, make sure to hit the subscribe button and the notification bell. I'm coming out with these kinds of updates all the time that are guaranteed to save you some money and can help you understand how you can invest that money to set yourself up for the future. So if you're into that, hit all those good buttons down there. And with that said, thank you so much for watching, everybody. I really hope you're able to take advantage of this new tax credit that could save you around $100, and I'll see you next time.